The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to join our Bursa Malaysia webinar. Now today we are going to talk about conventional versus online investing. Now we are very glad to have Mr. Alex Lu, who is a renowned remiser, to share with us what are the difference between trading with a remiser or trading it yourself. All right, and before I begin, just want to talk about disclaimer. Whatever we're going to share in this webinar is only for educational purpose. In no way that we give any buy recommendation or sell recommendation any stock. Everything we do is only for educational purpose. So you are responsible for all your financial decisions. Now, Bursa Malaysia have designed all this webinar series for you all. Even for beginners, we have on every first Tuesday of the month, we have the webinar designed for the level of beginners. So last month, we talked about financial statement analysis. We talked about FA fundamental analysis. This month, we're going to explore conventional versus online investing. And next month and the subsequent months, we have different topics for you. And if you're a beginner, you want to access more beginner topics of webinars, please block all your first Tuesday of the month for us. Okay. If you want to have access to more Chinese-based kind of education, please stay tuned for the second Tuesday of the month. On every second Tuesday of the month, we will have a Chinese webinar series designed for you. Okay, like next week, we're going to have value investing trading strategy. In Chinese is read 价值投资交易策略. Alright, so this is what happened next Tuesday. And for the third Tuesday of the month, we have more intermediate to advanced webinar series planned out for this year as well. So if you want to know more about advanced or intermediate kind of strategy investing, please block your third Tuesday of the month. Don't go anywhere else, but stay tuned to our Bursa Intermediate Webinar Series 2019. Now, before I proceed to introduce our honorable speaker today, just want to do a quick sound check. Can you all hear us and see our webcam? Please put out your hands if you do. All right, please put your hands. You can hear us and and see our webcam. All right, excellent. Please put out your hands right now. Now, our speaker today is a financial professional with background in stockbroking, equipment and project financing, commercial credit, loan documentation, and credit administration. You see his profile is so long. So he has been a capital market service representative since 1994 and is currently a remiser attached with Kenanga Investment Bank. So coming from a remiser perspective, I'm sure you can share with us, the pro and cons of trading with remiser or trading yourself. Okay, having a wealth of experience in the capital market, he has contributed his ideas and experience in the following ways, which he has his own blog, Next Trade, since 2006. He's also an official blogger for Malaysia Stock.biz and investment portal since 2017, and he's also a regular presenter, okay, for Capital TV program. He's also a contributor for Merdeka Review and Bursa Station, Share Investor, as well as webinars for kclau.com. Now he's also a graduate member of Chartered Institute of Management Accountants. Wow, are you an accountant yourself?
Well, it's a very sensitive matter.
All right, excellent. All right, okay. Today we have Alex Lu on the line with us to talk about conventional versus online investing. So what we'll cover today is we're going to determine the roles and responsibility of a broker and a dealer representative. We're going to talk about how you can identify how a dealer representative can add value to you, and as well as identifying the limitations of a dealer representative. And basically, you're going to learn how you're going to trade with them or without them.
Yes.
Right. So Alex, I think today we're going to split the two sessions, right? First section is dedicated to talk about conventional investing,
Yes.
conventional way of investing. And second session, we're going to talk about how we can trade online. So maybe you can tell us about what is a conventional way of investing.
Thank you, Shane. Good evening, ladies and gentlemen. I'm glad to be inside here because outside it was raining and I was caught in a traffic jam. Now, when Shane approached me to speak on conventional versus online investing, I thought I have something unique to share with all of you because of my background. Now, as Shan earlier shown you, I have been a remisier for about 25 years. Now, you can say that being a remisier, I would be on the front row of the evolutions in conventional investing. Yeah, and I have also been a blogger. I wrote, or rather, I published my personal blog, Next Trade, since 2006. That was about 13 years ago. And during that time, I have interacted with many investors who invest independently, and I think most of them are doing it online. So I have also have experience in that area. So this evening, I hope to share with all of you about conventional investing as well as about online investing. And I hope that at the end of it, you can decide for yourself which form of investing suits your particular needs and situations. And regardless of whichever your method you're using right now, that you can learn something, you can take home something to improve on your investing and the results. So let's begin with conventional investing. Now, conventional investing is not the opposite of online investing. It is not offline investing. That may have happened 10 years ago. Conventional investing simply means being supported by a full service blogger. Broker, yeah. A full service broker. And when you have service of a full service broker, you would be getting personal support in the form of a remisier attending to your needs, as well as backroom support to handle your paperwork, your payments, and whatnot. On top of that, the broker would have full strength research department to support the remisier as well as the clients, so they can advise you on the market outlook as well as what stock to buy. And many of these brokers have set up extensive network of branches so that they can better service the customer. And lastly, they have also set up online platforms and mobile apps so that the customer can view share prices real time and key in the order online or on the go. Now, the person who is in the center of conventional investing is, of course, the remisiers. So, what is a remisier? Right. Now, a remisier is simply a representative of a stockbroker. Now, he look after the interests of the clients, that is you. And he can do that because of his knowledge, experience, as well as the resources of the stockbroker, such as having a team of research analysts to prepare reports so that he is aware of the market conditions and what are the good stocks to invest in. And he's also someone who is very familiar with security laws as well as how to pick stocks and so on. And not everybody can be a remisier. A remisier is someone who has passed the Security Commission licensing examinations. There are two examinations that you have to sit for. That is under Module 6, which deals with stock market and security laws, and Module 7, which deals with financial statement analysis and also asset valuations. Now, once you pass these two modules, you will be given a license known as the Capital Markets and Services Representative License. Now, that license is not forever. It is renewable every year, subject to certain conditions, such as you have attended continuing professional education, as well as you have not committed any offenses under any of the security laws, as well as your financial condition is impeccable. Right. Now, that is a remisier. Now, what is the job of a remisier? What is his duties and responsibility? A remisier advises the clients on market outlook. He recommends stocks for the client to invest in. He executes the client's order. He monitors the client's portfolio. And lastly, he would process all the client's paperwork and so on. Now, how does a remisier advise the clients on market outlook as well as recommend stock for the client to invest in? Now, earlier we said that a remisier is someone who is familiar with security laws as well as how to pick stock. But a remisier is not an expert. Remisier is someone familiar with how to execute order and also have an idea about market outlook and so on, but he's not the expert. The expert here is the research analyst. The research analyst must have a CFA qualification. CFA stands for Chartered Financial Analyst. That is a very demanding qualifications, and a person needs to be studying for at least 3 years to be qualified to be a CFA. So the research analyst would prepare the reports, and these reports are passed to the remisiers. Now, the remisier, having read the report, can then advise the clients. I would like to share with your listener how is this process being carried out.
Sure. Yeah,
Right.
I would love to know too.
All right. Just imagine, for example, a new client came in and he wants to invest 100,000 in the stock market. So how do you do that? Now, the first thing you do is you take out the strategy report and you discuss with this client. Now, what we have here is a screenshot of the relevant strategy report for 1 year from Kenanga Investment Bank. But the same is probably available in most of these full service broker, right? The name may be different. You can see there are 8 reports here. It consists of 2 types of report that are produced quarterly. The first report would be the investment strategy report. The investment strategy report simply highlights what would be the target, in their view, the target for the main market barometer, which is the FBM KLCI. Now, just for discussion's sake, let's say Kenanga believe that year-end target for FBM KLCI is 100 points higher than today. That simply means that Kenanga believe that the market will slowly go up by about, I think, about 6%. So that means that a person who invests in the market would, on average, make roughly around 6%. But the strategy report also highlights which are the sectors that would do well and may do more than even 10%, and which are the sectors that may lag behind. They may even drop by 5%. So the term they use is for the sector that would do well would be overweight. The one that would drop would be underweight. And in between you have market weight. Right. So that is for investment strategy report. And the next report you may see is the quarterly result review. So what they will do is that they will take 3 months of financial result, quarterly result, and they will look for surprises, positive as well as negative, and they will take that and they will revise the earning, and if need be, they will revise their rating for the stocks as well as the target price. So the client who wants to invest will sit down with the remisier and we'll discuss whether this is the kind of market that he will want to invest in. And let's assume that he's happy with a 6% return broadly. He would then say, yes, please go ahead and help me to invest, right? And the remisier shouldn't just jump in like that. He would then ask the client to then determine what is the timing of the investment. That is the next thing, right? The timing of the investment is determined by the weekly technical report, right? What you're seeing here is about 9 or 10 reports since the beginning of the year. Every week there will be one report. So this report will basically tell you what happened last week, and also what they believe would be likely to happen the week ahead. So based on this report, the client may tell you, let's buy 50% next week, and then we'll decide for the balance. So that is how they would agree on the timing of the purchase. And then finally, the remisier would engage the client to decide on what he would like to purchase, right? So he would then pull out the rating summary. Now you will see something like 9 or 10 rating summary. It is produced on a weekly basis, and then he would sit down with the client and go through it. In the case of Kenanga, we cover about 145 stocks spread over 21 sectors. So assuming that out of that 21 sectors, the client agreed to invest in 5 of these sectors, then he would zoom into these 5 sectors and he would pick up the stock to buy. All right. Assuming our friend agreed to buy 5 stocks, the remisier must then tell him 5 stocks is not enough. You need to have sufficient diversification in the market. Now, the concept of diversification is very simple. If you invest in only 5 stocks for 100,000, so roughly you're putting in 20,000 ringgit in one stock. Just imagine what would happen if one of these 5 stocks got hit with a bad news. The factory got burned down. The stock price may drop. Let's, for discussion's sake, it dropped 50%. How much would be the loss? It would be a loss of 10,000 ringgit out of 100,000 investment. A loss of 10,000 ringgit would take sometime more than 1 year to recoup. So you explain to the client, 5 stocks is dangerous. Let's diversify up to 10 stocks or even 15 stocks. So this would be safer, and if the client agree, they will go back again and look through the rating summary and then pick another 5 stocks, right? They pick 5 stocks, and that makes 10 stocks that they will buy over the next 1 or 2 weeks. I will give you an example of a rating summary. This is taken a while back, 4 years ago, so as not to actually promote any particular stocks, 4 years old rating summary. And what we have here is only for one sector, that is the automotive sectors. For information, this is taken in February of 2016. At that time, the automotive sector was rated underweight.
Underweight.
Yes, we expect it not to perform well. But you notice that even though the sector as a whole is underweight, some stocks are actually rated outperform. Okay, let me explain the terminology here. Different firm has different way of rating a stock. In Kenanga, outperforms means the stock is expected to rise by 10% or more until year end. If the stock were to drop by 5% or more, that is called underperform. Right. And in between, if you drop less than 5% or you rise by less than 10%, that would be called a market perform. Outperform, market perform, underperform refers to how we rate stocks. For sector, it would be overweight, market weight, and underweight. Yes. So
how by the rating of buy and sell?
So if you say outperform, that would be equivalent to buy.
All right. So there's no buy or sell.
We tell you how we expect it to do, and that means that actually this is a buy.
All right.
So out of these 5 stocks here, Berjaya Auto, today the name is Permas Auto, is rated as a perform or a buy, and we gave a target price of a gain of around 20% or so. So that is how we would look at the stock. And if the clients likes to do it, they can actually request for a copy of the report on Berjaya Auto to actually read through it and understand the rationale behind the whole thing. And I think that is the better approach. If he cannot do it, at the very least, the remisier should summarize it so that the client has the benefit of the rationale behind the decisions. So basically, that would be the process that we go through to advise our client how to invest in the market. Now, I will now move on to the limitations that remisier faces. All right. Now, remisier work fairly independently. By that, it means they work alone.
Yeah, but some remisier have a team, right?
There are some teams in some bigger company. These are the big remisier. They will have people to support you. But there are also independent remisiers who tie up with fellow remisier. We call it being associated with each other. So, for example, if A is associated with B, B can step out of office for 1 or 2 days, and A will key in the order for B. So that way, remisier can actually leave the office in peace because somebody will be manning his stations. But that is not really a very big concern today because today we can actually key in the order on the laptop or even in mobile device for our clients. All right. The next thing is remisier has to work with all types of clients. Right? We cannot really choose and pick. We have clients who are traders and some who are investors. We have clients who are newbies and some who are old hands. We have corporate type, we have the uncles and aunties. We have all kinds of clients. Now, why does this matter? Because when we communicate with our clients, right, we cannot write 3 or 4 different type of messages. Thanks to WhatsApp, we can communicate very fast with our clients. So our message is kind of standardized. And some of them may find that, look, this is too technical for me. What is this uptrend, downtrend? Some of these uncle, they don't understand all this. But when you sit down with them, you explain to them, then they will accept the kind of communication you've sent to them. Most of them will just go right to the bottom and say, oh, this is a buy. Okay, so I'll buy. That's how they will do it. But you have to understand, this is our limitation.
Okay, can you kind of remind us reject a client?
We seldom reject a client. You probably have to go back like 5 years. There may be one client that was rejected. I have kind of rejected one client because after a while the trading is such that I don't quite like it. So I sort of stopped the client. I just reduced the limit to such a low limit that the client would eventually, I expect him to move away. So in a sense, you can do that. Yeah.
All right.
Yeah. Right. I will move on to the next point.
Sure, please.
Sometimes the remisier have to attend to large number of orders. This day it is not so frequent, but it can happen anytime. You can suddenly receive multiple orders that you have to execute within a very tight time period, maybe buy all of this order within the morning. So the remisier can be a bit bogged down.
Yeah. How do they tell you about the orders? Do they like WhatsApp you or they call you or?
There are many ways that order can be communicated. Some give you by email, and that's very worrying because now we tend to check email less often. Some will send it by WhatsApp. I think anything that is in a handphone, you tend to react faster, and I prefer that actually they give me a call. But WhatsApp is fine. Yeah, we can react to it almost within the minute itself. So that's how the order will come in. And we also have a variety of requests. That is nothing to do with orders.
Okay, can you give us an example?
Okay, 2-3 weeks back, for example, I was really bogged down with 2 rights issue, right, and 1 general offer. Two right issues. Now, it's right issues when it comes out, you have to inform your customer. You have to inform, say, Mr. Chong, your share has a right issue coming up. And that's not all. Some people may just tell you there's a right issue and there's the end of story. But the proper way of doing it is you tell the clients, ABC has a right issue, and give them the detail of the right issue, give him how many shares he has, and therefore how many rights shares he's entitled to, and then you give him your thoughts on it. You may say that ABC has not been doing very well, and I think that is really no point in putting your money in these stocks. So you have two choices, Mr. Chong. You can either bite the bullet and sell out of stock, or you can hang on to your stock, but when the rights come, you can sell off the rights. So we have to give this type of advice, and it takes time because sometimes they will want to talk to you and all that. So just imagine that day I had 3 requests, 2 different types, and it took up a bit of time. So reminders sometimes are occupied not by orders, but we have to render advice. Yeah.
If the client subscribe to the rights issue that he's entitled to, will a reminder make a commission out of it?
No. You don't make anything until he sell the shares or he buy stocks. You buy and sell. Only then you make a commission.
Okay.
Yeah. There are other requests as well. We'll cover that later on. And lastly, I want to move on to about working with reminders here. Now, one of the most important thing that I believe all of us must consider when you engage someone as your reminder is to see whether that the person is compatible with you. Right?
Yeah, like finding a partner.
Yes, you're right. It's like almost finding a life partner. So what you should do is like this. You should actually sit down and like get to know him. But actually, there's an interview going on. All right. I can give an example.
Yeah, please enlighten us.
Yeah. All right. About 2 years ago, one of my rather quiet clients is a doctor, introduced her son to me. I know this doctor for more than 30 years from my leasing days. I financed a clinic. So now she's retired. So introduced the son to me. And the son has a lot of questions to ask. The son is someone fairly new to the accounting professions. So he asked a lot of questions. And in my heart, I was saying that, he probably will be having more questions to ask me than money to invest. But since he is the son of my old client and a friend, so I entertained him and I opened an account for him. But what surprised me was after answering all his questions for 1 whole year, when he finally invested, he has a lot of money to invest.
Oh, wow.
Yeah, so you never know. So what he did was he actually interviewed me to gauge whether I'm the type of person who would answer his questions about whether a stock is good to buy or not. And also, he likes to learn how to actually select stocks. So I actually share with him what are the websites that you go through, how to do your spreadsheet and all that sort of thing. And after a 1 year period, the business then come. But you never know. You can actually take in a small client and he stay a small client. Maybe a few years down the road, he made it big, and then the business will come. So that is our life, and we have to accept it that way. So find someone that can work along with you.
Are there any questions that you can recommend to ask your reminder to see whether he or she is compatible? What kind of questions should we ask?
Okay, in this particular case, the person actually asked me, my plan is to he's tell me what is his plan. His plan is to actually learn how to invest for the next 6 months or 1 year. He actually tell me very clearly. Then he asked me, how do I do my own analysis of stocks? So I share with him. Now, some reminders can actually lay down very clearly the process of actually how you assess the stocks and where you actually go about getting the information. Right. So when you ask your reminder these type of questions and they they can answer you, and they seems very willing to answer you, then you know that you're not only working with somebody that is, well, I would say capable of doing the job, but he's quite willing to do the job. If you can find somebody like that, I think that would be a good match for you. Yeah.
Right, I see.
Yeah. Good. Let's move on to the next one. Try to limit the interaction during trading hours. As I said earlier, that Remiser can sometimes have a large number of orders to execute. So if you talk to him during trading hours, sometimes it can interrupt his work, right? The next thing is, when you give instruction, give clear instructions. I do not like people who tell me to buy a stock at the lowest price. That is not clear instruction. I don't like to have instruction like sell at the highest price. You have to give specific price. It's not that we want the order to be must be done, but if the order is not clear, it is very hard for us to do.
Yeah, it's like gray area.
Yes.
If you have sold at this price, maybe he's not happy.
Yes.
If you bought at this price, maybe he's not happy with.
Yes.
Yeah.
But normally when after I know the client and you know that that's his method, yeah, you would just tell him that this is a code and can I go at this price? But the back and forth will take times, and you may not have the times to go back and forth. So I just imagine if you are doing it by WhatsApp, you have to send a few more text messages in order to fix how many units you want to buy, what price can I key in the order. So that is something that you have to work up with your Remiser. And give reasonable time for studies. This is with regards to certain requests that you make to a Remiser, and sometimes the only way to accede to the request is to actually do a study. For example, if you ask him for particular stocks, and he cannot find a report to sort of like support his advice to you, then he would have to do a study. I will talk a little bit on that later on. I think there's one more point to go here. Yeah, the Remiser would monitor your portfolio, but you must understand that a normal Remiser will have something like 1 to 200 clients. As much as they want to monitor your portfolio, you can see that monitoring the portfolio can be a big demand on the Remiser time. So I think it is good that you have to do your part, monitor the portfolio, and maybe bring it up to your Remiser for discussion from time to time. Whether you want to reduce certain positions or you want to add on certain position, discuss with him. But do monitor your portfolio yourself, and don't just rely on the Remiser. Right. I'd like to move on to the point number 4, right, about how to work with Remiser and about doing a study. Now, assuming that we come into this request from the client now, like the question would be, is ABC a good stock to buy? And let me just go through what would normally happen if a question like that comes to a Remiser. Assuming that the client is not very internet savvy, he doesn't know how to access Kenanga research website to take the report. So what I would do would be, I would go to Kenanga research website. I would look for the report for ABC, the latest report. And if the report is there, it's very easy, so I can just summarize the report and give it to the clients. Now, occasionally, well, I wouldn't say occasionally, there are many times that the report is not available because Kenanga only cover around 145 stocks, and there is around close to 1,000 stocks. So there are quite a bit of stocks that are not covered by Kenanga. So what we would normally do is we would look at the stock and look at the sector that this stock is in, assuming that it's in the banking sector. We will speak to the banking analyst and we ask him, Do you know anybody with a report on this particular stock? So I think there's an understanding among all the investment banks that they can like support each other with reports. So let's say another stockbroker has a similar report. So this analyst may request the report and then he'll pass it to me and I can study it and share it with my client. Now, the difficult part is when there is really no report out there. All right. Even after you use this way of searching for the report and you go into the internet and look for a report and there's no report out there. So you have to write the report. All right. But it's actually not very difficult. You can actually prepare a one-page report. The important thing is just list down 5 points. What business is this stock involved in? What is the financial performance? All right. What is the financial position? Financial performance refer to profits and revenue and all that. Position is different. Position refer to condition of the company. How is the gearing? How is the liquidity position? So you mentioned about that. Specifically, you don't say the company is profitable. That is not good enough. You said the net profit of the company is 21 million ringgit. It's very specific. And talk about valuations. Now, most retail investors understand what is PE ratio, price over earning. There are quite a bit of people who want to know about dividend yield. If you can compute P ratio and dividend yield, it will be very good, and the client would appreciate it because he would be able to understand whether it's attractive or otherwise. And lastly, nowadays customers are quite savvy. They also like to know what is the technical outlook. Is the stock on a rising trend, and so on. So you have these 5 points, right? If you put yourself in the client's position, you can actually conclude whether it is something that you want to buy straight away. So you prepare a one-page report like that, and if you have a price chart, paste the price chart on the report. If you take financial data from Bursa, put a link there so that the client can actually go there. If they cannot go there, you take a screenshot and you paste it there and you send it to the client. So this would sort of meet Bursa requirements. Bursa requirement as far as how Remaisia advise the client is such that it is true that Remaisia can advise client on stock purchases, but the client cannot depend on the Remaisia market knowledge. These are very funny terms. It simply means that they want the client to actually understand and do a bit of background checking. So you as a Remaisia, when you prepare this report, you give a little bit of background information so that the client can actually do his own fair share of analysis. So they can then make a decision whether to invest in a stock.
All right. So, so it's a requirement by it's a responsibility of Remaisia to prepare the report in the event that there's no such report.
Is not a requirement per se, but it is something like, well, if you cannot render an opinion on the stock, the client would not be able to give you an order. So you can actually help him by giving him a short report. I can actually later on show you where you can actually get something.
That would be very helpful.
Yeah.
Yeah. So after talking about how do we work with a Remaisia, which is the conventional way of investing, can we talk a little bit about how we can do it ourselves? What is it about online trading that is so trendy right now?
All right. That's the next section. Okay, we move on to online investing. Now, as I've said earlier, when you talk about conventional investing, the full service broker is not absent from online investing, right? They have their own online platform, they have their own mobile app. So when you talk about online investing, what is so different? You can just as easily give an order to your Remisi, or you can just pull out your laptop and you can access the online portal and key in the order. Now, the difference is what we have seen the last 1 or 2 years, which is the appearance of some pure online brokers. Pure. As in, they don't have
Remisiers.
they don't have remisiers, they don't have back room, they don't have branches. I dare say that they may not even have research department. I think research department is a very expensive department to have. If you keep 15 analysts, like Kananga has 15 analysts, we have economists, we have a head of research. A research department costs about 2 million ringgit. So
A year.
yes, a year it will cost about 2 million ringgit. So this type of company, a pure online broker, they would try to be very slim. They try to be like the Asia of the investing world. So they keep the cost down. What they have is a very powerful system. It's the so-called fintech technology, which is somewhat similar to what the full service broker has. Maybe they have slightly more because of their particular situations. You don't have a back room, you don't have a reminder, so they may have certain feature to cover for this shortfall. But otherwise, they are very similar. But the main point is that they offer much lower brokerage or commission rates, and that is the competitive edge, and that's how they would try to take customer away from the so-called conventional broker, right? So that is really the background on online investing, and I would share with
Sure.
the listener about the system that you have to work with, and beginning with basically the order entry. What you have would be you have a screen with the order prices. They are real time, right? And then you can key in your order. Now that order entry is a system where you can also amend the prices, amend the quantity, and so on. And when the order is done, there is also an order status window so that you can actually see how the whole thing is done, right? The next thing is you have the payment system. Now, when you talk about pure online broking, payment is upfront. So you need to transfer the money into their account, and then you will have a limit to buy. But when you sell a share, the money will be kept back in that account unless you request for it to be transferred. So you have the payment system there, and you have a very limited stock selection system, because their their research department or the research material is not complete. It is there, it is simplified, it is not so complete. So this is one area that you have to accept that there is some shortcoming. But for some people, this shortcoming it doesn't matter to them. I will just share with you who are the people that can live with this type of shortcoming. Number one, it would be clients who actually buy stocks on an ad hoc basis. Your friend tell you about ABC, it's going to go up. Straight away you buy. You're not going to do any research. Or you read in the newspaper, XYZ just got a big contract from the government, you straight away buy. So these are people, they don't need to do research or things like that. And the second type would be the MacGyver. The MacGyver
What's
type.
that?
They do it themselves. They don't even like to refer to Kananga's research report, for example. Yeah? They want to do it themselves because they want to get a feel of the stocks. So they will take all the quarterly result, they will study it, they will analyze it, and then they will come to their own conclusions. So when you have a system like this where you have very limited research report or tabulation of stocks rated and so on, it's fine with them too because they don't need that. So these two types of people, this system is okay with them, right? Now the next thing is portfolio monitoring. That this I must say that is also a system that is one of their strengths. The system capture all the share that you buy in your portfolio, and then you can view it anywhere you go. You can view it if you have it on a mobile app. You can view the share price instantly. This is one of their strength, but it's also available for, say, the online system or mobile app of full service broker. And lastly, paperwork. Now, paperwork, you may imagine that without a back room and all that their paperwork may be a bit challenging. But in actual fact, they actually work out a very good solution to this. And they can actually do fairly well too. It can be one of their competitive advantage. I explain why. Because in a normal full service broker or conventional investing, all your transactions, all your purchases is in your name. You are the registered owner of that share. Now, being a registered owner of that share, that means that, for example, if there is a right issue, you have to fill up the application, you have to buy the bank draft, you have to mail it in. For purely online system, you are not the registered owner. You are only the beneficial owner. All the share is kept in the nominee's account.
Oh.
By keeping it all in the nominee's account, there's a team in the nominees department that will do the processing. So what they will do is, for example, ABC has a right issue. They will text to you, ask you whether you want to accept the right issue, subscribe for it, whether you also want to subscribe for excess, and then they'll tell you how much you have to pay it. You transfer the money in, they'll do everything for you. So what would have been maybe their Achilles heels is actually one of their strengths. It is actually very convenient. So basically, this is the ecosystems of.
So by that means the owner cannot attend the AGM.
You can get this proxy form, recognizing that you have a certain share in the company, then you can attend.
All right.
Yeah.
So the broker will give you the form.
Yes, they would have to
All right.
give the form to you. So basically, this is the system that we work with, and obviously, if you are one of those investors who like to rely on research report to make a decision, this system make a demand on you, right? You have to equip yourself to overcome the system. So there are three things that you have to accept that if you want to do that. Just imagine you are one of the MacGyver. No? The first thing is you have to have the knowledge. Right? You have to learn how to select stock. All right. Now, in fact, if you backtrack a little bit, okay, let me just backtrack here. You have to learn every one of these things so that you can operate in this environment. Take order entry. Order entry is a very simple system. My recommendation for people who like to trade online is to practice keying in before the market opens, be it in the morning or in the afternoon. Practice a few times. You get the hang of keying in your own order. Payment system is very straightforward. I'm sure if you have any problem, the help desk will help you. And so is the last one, paperwork. You just have to talk to the help desk. They will help you. So it is actually on portfolio monitoring and stock selection that you need to have knowledge and other things as well. So let's come back to knowledge. I will talk about the kind of knowledge that you must have to do well, since you are actually going to do it on your own, right? And the next thing I will talk about is actually bringing that knowledge that you have acquired to a level that is, I would call, skill. A lot of people learn something, and to them it's good enough. But if you want to do well, and in stock market out there, there's no such thing as a win-win situation. You know, what you win is somebody miss out, they lose out. So you have to up your skill to match with other people. So knowledge is not enough. You must put into practice. Bring it to a skill.
Like a zero-sum game, like what you're suggesting.
Yes, but of course, if there's a bull run, everything goes up, everybody wins. But most of the time, you have to bring up your skill to do
Alright.
well, right? And the last thing is, of course, time. So you need time to learn the knowledge. You need time to sharpen the skill. You certainly need times to do your homework as well as to monitor your stock. Is there any question that you, or any thoughts you want to share?
No, at the moment.
Right. If not, I shall move on to. There's also intangibles. The things like, if you get into a stock, you should have the humility to understand or to accept that sometimes things doesn't work out well. This intangible humility is one. The other one would be commitment. For example, we talk about the MacGyver types of investor. Why do they do that? One of the things that actually guarantees success in investing is commitment. Commitment actually comes when you actually understand what you are buying, what you're getting yourself into. It is different if you just read a report and you say, "Oh, I want to buy this," but if you actually did the work, did all the spreadsheet and all that, you actually understand the company better. So you become more committed, right? Of course, it's a balancing game. Yeah, if you are more committed, you may be a little bit less humble. And if things goes wrong, you may hang on to a stock for too long. So it's a balancing game. So when you talk about the requirement on the investors, when you get into online investing, you have to have a balance between IQ and EQ as well. So when intangible is concerned, we're talking about EQ here, right? So, right, I want to move on to
Knowledge.
Yes.
Yeah. What do we need to learn
Yes.
as an investor?
There are basically two broad methods of stock selections. The first method is what is known as fundamental analysis. Okay, fundamental analysis for investors, you look for things like financial performance. It would be like the profit of the company, whether the profit is adequate in terms of return on equities, return on assets, and then you also try to find out about the profit growth for the stocks. So look for these kind of things so that you have a feel for the stocks, whether these stocks is one that will continue to grow. So for example, if you have been studying the rubber glove sectors, you can see how spectacular is their profit. And you can see also over the years how profit increased. These are the things that actually make you feel so much more confident in the stocks, or that you must get into a particular stocks. Look at financial performance. The next one is financial position. Financial positions or financial condition, and talk about
Cash
gearing. Talk about your ability to meet your short-term obligations. What you have that you can realize within 1 year, we call that current assets. How does that match up with, say, what you have to pay up within 1 year, the current liability. So this, when you take that divided by this, you will have what you call the current ratio. And normally you have to get more than 1 times. So that means whatever you collect can cover whatever you have to pay out. Things like that will determine your financial positions. People may say, oh, what is the cash holding of the company? That alone does not account for everything. You look at current ratio, you look at gearing ratio and all that. So these are the other things that you look for in terms of financial. And lastly, you try to value the company, right? Valuations, there are 3 that is very commonly used, but the most popular is PE ratio. PE ratio is price to earning per share. So if you want to really understand what is PE ratio, it is somewhat similar to payback period. So if you buy a stock, say for 10 ringgit, and the stock every year earns 1 ringgit, so basically it takes 10 years for you to earn back what is the earning of the company. So that is like a payback period. So that's P ratio is very popular, and the other would be price to book ratio, and then dividend yield. I would like to share an example to illustrate all this, tying in financial performance with valuations. This is like a story like that. Okay, how to value a milk cow. Right, this is a story I read which I find to be very interesting. A fund manager approached Benjamin Graham. Benjamin Graham is the father of fundamental analysis. He is Warren Buffett's Sifu, right? So this fund manager, his name is James Rears, and he came to Benjamin Graham and he says that I have a new theory on stock selections. I name it high return and low risk theory of stock selection. All right. Now, as you know, Benjamin Graham is so well known and so many people comes to him and everybody would pitch this idea and that idea to him. So that day, he threw a challenge to James and said, James, sell me your idea without mathematics, without all the fanciful formulas. Tell me how your ideas work. So this is what he said. Stock selection is like how to value or how to select a milk cow.
All right.
Now, you would like to have a cow that produces a lot of milk,
Definitely.
isn't it?
Yeah.
Right. So for a stock, you would like to have a stock that has a lot of earnings.
Definitely.
Yes. So a lot of milk is like a lot of earning. And you would also like to have a cow that produces more milk year over year. Now, in stock, you call that earning growth, right? Now, while you're on earning growth, we like to have earning growth to be stable, relatively stable, like it increased by 2%, 3% a year, ideally, but sometimes you can have like 0%. Then it come back again, another 2%, 3% a year. But what we don't like to have is this year earning increased by 10%, next year earning drop by 10%. That is unstable growth. Now, that is not so desirable. Okay, that is in fact to be avoided.
Yeah, because that's not predictable.
Yes, predictability is important.
Yes, definitely.
And the next thing is coming back to the milk cow is
A lot of cheese.
yes, turning the milk into cheese, and that is same as dividend. You have a lot of earning, but if the company don't give you any dividend, that's it. All the earning will be kept by the company. But if the company give you some dividends, then you have an income. So it's like you converting the milk into cheese. So basically, These are the three things that you look for, and this explain about the theory of high return, or rather high rewards. So when he stopped there, Benjamin Graham asked James Rea, "What if your cow stopped producing milk?" That's when he explained about the second part of his theory, which is low risk. Now, if you buy a cow, okay, and the cow stop producing milk,
Like when it's too old.
or maybe there's some problem, I don't know, he stopped producing milk. So what you have to do is, sad to say, you probably would have to bring it to a slaughterhouse, right?
Kill it.
Yeah. You bring it to a slaughterhouse, and then you try to recoup your investment by selling the meat.
Yeah.
Yes, right. So how much you pay for the cow and how much you get back by selling the meat, now that determines the risk. Yeah. So price over meat, and in stock, price over book value. Now that determines the risk. So that is the whole concept of high rewards and low risk theory of stock selections. And in fact, Benjamin Graham was so impressed with James Rea, they actually set up a fund to manage, and they have two funds. When this story came out, I think it was around 10 years ago, the two funds still exist.
Wow.
Yes.
Oh, that is
So it's quite amazing.
very cool. And I think Benjamin Graham didn't even have a fund with Warren Buffett.
Yeah. So that is about fundamental analysis. Fundamental analysis is a very big subject, and as I said earlier, we're talking about the experts who actually prepare all the research report. These analysts, they have to sit for the CFA exam. The people who have a CFA qualifications, they understand thoroughly about fundamental analysis as well as portfolio theory, right? So the next thing we'll talk about would be the second most important method of stock selection, which is technical analysis, right? All right. Technical analysis is actually based upon the analysis of historical prices and also on volume traded. You do that because you want to determine the price directions. And the premise for that is very simple. Prices is determined by the forces of supply and demand. So it is as simple as that. Again, it is not that simple, because technical analysis, if you want to get a qualification to call yourself a technical analyst, you may have to study for CFT, Chartered Market Technician, and it's a 3 year course.
Chartered Financial Technicians, CFT, right?
No, Chartered CMT, sorry.
CMT, is it? Okay.
Chartered Market Technician is a 3 year course. They're here in Malaysia as well.
I also heard there are MFTA, and there's a lot of qualification given, accredited by different bodies.
Yeah. So technical analysis is, again, as I said, it can be a very big subject, but actually as investor, you don't need to learn that much. You need to know the fundamentals, and we can run with that. You can study the charts, and then you get the hang of it. I'm going to give an example here, and this example is about how to determine stock trend. It is a very simple example, and it may not satisfy any technical analysts out there. So I would ask you to bear with me for 5 minutes for the benefit of people who don't know about technical analysis, or people who are quite new to technical analysis. Right? See, when you talk about stock in a trend, we want to determine whether that trend is an uptrend or a downtrend, or it has no trend. Some people call that trendless, or other call it sideways. Right? A downtrend, the one that you're seeing in front of you, the red line, that is a downtrend line, right? Downtrend line and downtrends are about the same. Let me explain downtrend first. Downtrend is a series of lower peaks and lower troughs, or lower high and lower lows, right? So in the case of the red line, you draw the downtrend line, you connect the peaks. So you can see that every time it rebound, it failed to make a new high. In fact, it is actually lower. And when it dropped, the trough or the low is actually lower. So this is a downtrend. And there are two blue lines there. These are uptrend line. Uptrend lines is a series of higher trough and higher peaks, or you can so say higher high and higher low. So this is an uptrend line. Now, there's a second uptrend line in blue, the shorter one. It means that this uptrend actually accelerated. It became faster. You can actually see that it went into almost a steep 45-degree climb compared to the other one, which is probably around 30-degree climb. So it is an accelerated uptrend until it cannot sustain, it's unsustainable, and it broke and dropped back to the more gradual uptrend. So you can actually draw trend line onto price charts, and that will guide you in your trading or in finding the spot that you can buy the stock at the best lowest price. It may not happen, but you can aim towards that, or buy close to that, or sell in case of a downtrend, sell as close to the downtrend line so that you get the best price. So this is the function of trend line, to firstly determine the direction of the price, and then also to use that to determine where would be the entry or the point where you want to exit the stocks. So that is stock trend, right?
All right. So
Yeah. So that is on technical analysis.
hurry a little bit.
Yeah. Okay, very quickly, we talked just now about how to convert, or rather how to move from being knowledgeable to having skills and to acquire a level of expertise that would serve you well. This concept I took from Toastmaster Pathway Education Program. Yeah, when you first learn something, you say you master the fundamentals, and then you try it out, put into practice, and that means you learn your own style of doing it. And then you go back to the book and read again, and you say, yes, I missed a few points. And then you go back and practice again. So you increase knowledge, you go back to practice, you master more skill, and if you keep doing that, you will reach a level we call in Toastmaster demonstrating expertise. Yeah. So this is the concept that I always urge people to adopt in terms of their learning, right? Now I want to give an example of the application of skills. Now recently, you may have seen that some poultry stocks rose pretty sharply, and yet there are some that did not go up much. So I put two of them side by side. The one on your left is Lei Hong, and you can see that the price is actually more sideways, and the one on the right is Teo Sing. Over the last 6 months, the share price has went up very steeply. It is better than 45-degree angle, the kind of rise. Now, why is that so? It's very easy, actually. It's because of profit. See, Lei Hong profit is from a loss, it bounced back to a small profit. Yeah, and you look at Teo Sing, but by the way, poultry stocks, the profit can fluctuate a lot because it's all depend on prices. Now, but you look at Teo Sing, it was actually 3 quarters ago, it was actually at the break-even line, zero line, but now it has jumped up to as much as 25 million for the latest quarter. So why is that so? I mean, both are in the poultry industry, And the reason is this: Lei Hong is the integrated poultry player. They produce feed meal, they produce day-old chicks, they produce chicken meat, they produce chicken egg. They also have retail outlet. Right?
Oh, very vertically integrated.
Yes. Teosing is not. Teosing is, well, it's a layer farmer.
Only real
Only chicken egg.
chicken. Okay.
Only chicken egg.
Only produce chicken eggs.
Yes.
Okay.
Right. And if you look at the price chart for chicken meat, the one on the left, and chicken egg prices, the one on the right, you can see very clearly that egg prices has been going up very steadily for around 6-7 months. So my point is this: to know about the stock price going up, you need to know about the profitability of the stocks, right? But once the profit report is out, the quarterly report is out, everybody knows about it. There is no advantage to you because the price has gone up. So if you want to do well, you need to go one step further. You need to know chicken prices, for example. So this is about the applications of
The knowledge.
knowledge to the skill level.
So we take it from knowledge to the higher level, like
Yes.
skills.
So yeah, basically that's it. And very quickly, we just move on to the pros and cons of online investing. Yeah, the pros would be that if you do it, you increase knowledge, you learn new skills, you practice independent decision making, right? Which are good things to have. And the cons would be you have to learn a lot, and you have to, do all this. It's very time consuming. Right. And when I want to put it side by side so that you can see clearly why some people opt for one and other people opt for the other. Right. You have 3 columns there. Right. The one on the extreme right is investing online with a pure online broker. Right. The next to it is investing online conventionally. Right? You key in the order yourself. You are doing it on the platform offered by a conventional broker. And then the one next to it is investing conventionally with a remisier. The remisier will key in the order for you, right? So as you can see, the first row about broker giving you advice, because you have a remisier serving you. If you invest conventionally, even though you are actually keying it yourself online, right? You have somebody supporting you, but not the case if you were to do it with a pure online broker. Next, research report, right? If you're talking about the pure online broker, you have very limited research report. Next, payment, right? If you are dealing with a conventional broker, you can deal on a credit term. It's T+3, meaning you buy first, you can pay 3 days later. For pure broker, online broker, you have to pay upfront before you buy. And lastly, the thing that a lot of people pay attention to is about the brokerage rate. Now, this is for small contract where the minimum brokerage is charged. If your remisier key in the order for you, the minimum brokerage is 40 ringgit. If you key in yourself, it is 30% cheaper, 28 ringgit. But if you do that on a pure online broker platform, it is 75% cheaper at 7 ringgit. So it gets very much cheaper, but the support you get is less, and you ask yourself whether this is suitable for you and what you want, right? I'd like to share about some of the resources available, but I do not know whether we have time. Do we have time?
We only have 15 minutes left, and it's designed for Q&A.
Oh, right.
Yeah.
Okay. I tell you what, this I will just show you what I have, and I will just quickly tell you what you can get out of it. Right. Bursa Malaysia is a very good place to get research report in case if you want to do pure online investing and you say I don't have research report. Bursa Malaysia has it. Right. Let's talk about KSC i3 investor and also Malaysia stock. They have very good portfolio systems, because once you key in your portfolio, and then if you want to know what is happening to the stock, you just click on the stocks. You will know about whatever announcement they have in Bursa and the latest news. So I thought that it's all in one place. You
Sure.
don't have to search for it. And if you want to, for educational purpose, Investopedia is very good for fundamental analysis, and stockchart.com is very good for technical analysis. And lastly, google.com. Some people may be smiling, right? I want to show you this because I have a lot of people asking me, Alexa, why is ABC going up right now? This is normally how I find out why a stock is going up. You go to google.com, you type in the name ABC share price, you search, and then you go to tools, fine tune it to 24 hours. What is the news on that particular stock? Chances are you will learn why the stock is going up.
If there's no news,
If there's no news, there's nothing.
okay, what would
Yeah.
that mean?
There's nothing.
All right.
There's no news out there. All right.
Okay.
All right. Basically, that's it. That's all I have to say. Yeah.
Yeah,
Yeah,
thank you so
Sure.
much, Alex. Yeah, you still have your conclusion slide.
All right. Oh. Yeah, I'm getting thirsty. Yeah. So I believe that more and more people are investing in equities, and for obvious reason, because the return is now quite attractive. The returns, in my opinion, commensurate with the kind of risk you're taking. So if you're taking about 10% returns, the risks you're taking may not even come close to that, right? The next thing is, I believe that if you are starting out on a journey investing, it is better to work with a remisier, at least for a year or two. But if you find that your particular remisier is very helpful, you may want to stick around a bit longer. And once you get a hang of it, and you have the time in hand, you can consider do it yourself. It may be cheaper, and in the long run, whatever saving you have will enhance your return. But you have to ask yourself whether you have the time and the skill to do it right.
All right. So that
That's all.
is your conclusions. All right.
Yeah, this is my blog, nextstreet.blogspot.com. Yeah, and you can reach me at this email.
Right, which will share your
Yeah,
his
maybe
email
later.
shortly. So now we want to open it up for question and answer. But before we go to question and answer, I would like to launch a poll while you're writing down your question. All right. So the poll now is: which service are you more convinced to use now? Do you think you want to use through a remisier, or you want to online trade yourself, or you want to pick the middle? Okay, conventional way of doing, but slightly do it yourself, right? Which the
Keen
middle,
yourself, yeah.
which is keen yourself, right? Please pick it. All right, while you're doing the poll, please write down your questions in the box. All right, in the question box. All right, many of you have voted. I open up for another 5 seconds before I close the poll while giving you time to write down your questions. All right, let me close the poll now and share the result with you. Okay, for those of you who are online now, 9% of you will consider using a remisier. 43% of you will want to do it yourself, okay, DIY yourself by online trading, while 48% of you will want to take the middle half,
Right.
okay?
I think it's fair.
All right, so this is the online poll out of a few hundred attendees tonight. Okay, so let me hide the poll and go back to our question and answer. All right, so now on my screen, there are many questions here. The first one is, how come there are so many rich people like to use nominee account instead of their own CDS account? Would you care to explain?
I think one of the reason is to sort of hide the ownership. At least, when you report it on, you have to report this to the secretaries and whatnot. Sometimes, if you hide it behind that, you wouldn't know who is the beneficial owner. That I think that is one of the reasons it's been done.
I see. All right.
Yeah.
So if you use a nominee account, sometimes the name would not
Yeah,
appear.
you may not appear. Yeah.
Okay. So can someone change a reminder?
You mean, okay, if you are, say, in firm A, and then you are attached to Remisia, say Mr. Tan, and you want to change to somebody else, yes, you can do that. You just approach the management. You don't approach Mr. Tan, he won't be happy. You approach the management and say that you want to change your Remisia, and they will. It is a very delicate issue, and they will find a way of doing that. Yeah. Yeah.
All right. So how about like let's say someone already has a account with a dealer,
Mhm.
with
Yeah.
a bank,
Yeah.
and after that he feels that dealer isn't very helpful.
Uh-huh.
Then can he change to a reminder?
Oh, yes, you can.
Just also talk to the
Yeah.
management,
Yeah.
right?
Yeah.
I think there are some questions on that.
Mhm.
All right. But the same applies if you want to change reminder from company A to company B.
Oh no, that is different. You have to open
I
an
mean,
account.
you open an
Yeah.
account, right?
Yeah.
Okay. So yeah, there's some. Okay. So what's the difference between a dealer and a reminder? That's the next question.
All right. The term dealers normally connotes someone who is on the company payroll. So he has a fixed salary. Whereas Remisia, we have no salary. We are based on commission only. So normally, when you're talking about dealers, there are two types. In a small branch, the dealer is actually a central buyer. He's the one doing sell out and all that. In the head office, the dealers actually handle big accounts, like funds like Kazana or EPF, things like that. So that is the difference.
All right, I see. So the next question is, what is the minimum amount that we can start investing?
You can start investing with even 10,000 ringgit. You have to accept that you probably won't buy a lot of stocks, but it is a good start. It's a very good start. In fact, something that I encourage my children to start investing even as a young age, so that it motivates them to save. Yeah, that is a very good point about investing young.
I see. All right. So next thing is, uh, the question is, can we be a reminder, but at the same time doing our normal job?
Oh no, no, you can't. You can't. Uh, I think the exchange has come up with something called a referral thing, so that you can sort of like refer somebody to the firm and get a small fee or something like that. But to your specific question, no, you can't.
Yeah, because otherwise it's not so responsible for your clients, right? You have a full-time job, then you become part-time a reminder.
Yes, yeah, and it's not like real estate agency. Where the thing move a bit slower. Stock market you can move very fast, and if your client asks you what's going on, and then you say, "I don't know," it's not good.
All right.
Yeah.
So the next thing is, what are some of the pure online broker?
I do not know many. I only know the one that Kananga invests in, and it is a different outfit. We don't take it as part of the Kananga group. It is just a pure investment, and that company is called Rakuten. It is very big in Japan. So, in fact, it is the first one to be here in Malaysia. But I understand that there are other as well.
All right. So how many accounts can one person open?
Well, in the same firm, you can open more than one account. it would not be sensible to open more than 2 accounts. I understand that there was a big fight on this matter, so I think most stockbroking firms now allowed you to have 2 remisiers, so you can have 2 accounts. But if you're talking about opening with other brokers, there is no limit. You can open with all the brokers in town.
Can we ask our remisier to send us the research report every time it comes out? That is the next question.
Oh yes, you can get research report from your remisier. Yeah, you put your name on the mailing list, and then you will get the research report.
I see. Okay. Just give me a minute now. How do we know that an online platform is trustworthy? So that is the next question.
That's a very good question, by the way.
Yeah.
As you know, all stockbroker has to be licensed by the exchange. Yeah, the license is called Capital Markets and Services License. We Remisier have Capital Markets and Services Representative License. Rakuten, for example, do not have a full license. It has a limited license. Now, whether it's a full license or limited license, there's a lot of restrictions, and the exchange will monitor you. So, in that sense, you can trust that they won't be, fly by night and just disappear. They would be there. They are being monitored all the time. Yeah.
I see. Now, how can we determine if the remisier is giving us a good service?
That's hard to say, but you should know whether he's giving you a good service. Whether he's attentive to your needs and whatnot. If you make a few requests to him, and you see whether he is the type that come back to you and try to help you, I think that should give you a rough idea about whether that service is good or not.
Right. Can one person ask, or can an investor ask remisier to help to summarize the analysis of the company in terms of both FA and TA?
You can. Whether he would do it for you is a different question. You can. In fact, if you look at the research report, the gist of it is actually on top. It can be about 40, 50 words. I can actually copy the whole thing and give it to the client, and if he's happy with that, it's good enough. But sometimes they want a little bit more on one particular point. Why you say forward earning is so much. So then I will have to go down and search for the paragraph, and I may have to summarize that and give you again. So actually, it is easily summarizable, so that you can put in a WhatsApp and send a message to you. Yeah, it's quite doable.
All right. So can we have 2 direct account instead of nominal account in the same group? That is the next question.
Yes, you can do that. You can have 2 accounts in the same company. That's not a problem.
All right. The next, probably the last question I will do here is an ISE also a dealer remisier? Do they also get commission?
What is ISE?
Yeah, it's written here ISE.
I'm not sure.
You're not sure about that?
Yeah, I'm not sure about the term.
All right. Okay, cool. All right. So, yeah, that concludes our webinar today. And I think we have Alex here showed us quite a different perspective of how one person can do it ourselves, DIY, or we can rely on the remisiers to execute our orders and be advised by them. All right. So, but of course, what we can summarize is that if you can do it yourself, you have time and the skills, you might want to do it yourself because that's cheaper alternative to trading. And of course, if you're a new investor, as what you suggested is probably you want to start with a remisier first, getting a hang of things until you build up your knowledge and build up your skills, only you move on to online trading yourself.
Yes.
Yeah,
I think that's a better approach.
So that's what Alex suggests us to do. So now, next webinar, what do we have for our next webinar is we have a Chinese webinar sessions coming up next Tuesday, where we talk about value investing trading strategy. All right. So now, for long period of time, people think that value investing equivalent to long-term holding. All right. In the next webinar, we're going to debunk the myth, to share with you that how you can also trade and undervalue stocks. All right. So that's, if you are keen to learn more, but of course it's conducted in the Chinese language. If you want to learn more about this in the Chinese language, please stay tuned and register for the webinar, which the link will be shared to you in the reminder email. Okay, in the attendees email subsequently. Okay, please mark down the date 9th of April. All right, and then and register for this webinar in our when the email is sent to you. Okay, please take note. All right, so with that, thank you so much, Alex. If you want to reach Alex, please go to his email, alexlu_kl@yahoo.com. Thank you so much, Alex,
All right,
for
thank you.
joining
Thank
our
you for
webinar
having me.
today.
Yeah. All right.
Pleased to have you share your nugget of wisdom with us. All right, with that, have a pleasant rest of the day, guys, and I'll see you on our next webinar. Bye bye.
Bye.